Welcome to Master Trader's Weekly Trade Review. I'm Dan Gibby, and in this important session, we're going to talk about when is it safe, when is it the proper setup to buy initial breakouts, and what are the clues of a possible breakout failure that I should stay away from. We teach that these are the only 7 stock market events that are possible. And then we obviously then teach how to identify an uptrend, a downtrend, a sideways trend. And these are what we call the transitional phases. When you trade under major support, prior pivot low in an uptrend, you have broken the uptrend. In a downtrend, and you trade above a prior pivot high, then you failed to have lower lows and lower highs. So you've broken the back of the downtrend. Today I'm going to talk about breakouts. When is the proper time to buy a breakout? And then obviously everything we teach applies to the bearish setup. These are just 9 pictures of very simple red and green candlesticks, and we then teach how to take these pictures and overlay them into which phase we are of the trend or a transitional phase, and then we add the other concepts that make up our approach, which includes such things as, is it on support or resistance, showing relative strength or weakness, what are multiple time frames saying, what are the broader markets doing, and then we simply have a compelling setup on the time frame that we're trading, and we enter and manage in between in accordance with our trading plan. It's that simple. This is the correct breakout. The clues that we're going to be looking for on buying an initial breakout is bullish price action at resistance, looking to the left and having a price void, which means insignificant resistance to the left. We never buy from the bottom of the range to the top of the range. That is a novice approach. There's a concept that we teach called greater than 100% retracement, and the odds of then a subsequent retracement are very high. What we call a secondary entry is to allow it to break out, pull back to minor support with some picture of a bullish reversal bar, and then that's an alternate excellent place to get on board breakouts. Same obviously on the breakdown. But today I'm going to show you an example here of where it's a very high probability initial breakout, and all of the clues that suggested with high probability that it was going to continue higher like it did. This is TECL. It's a levered bullish technology ETF. This is our daily chart, and notice how simple every one of our charts are. Red and green candlesticks, color-coded volume. We use moving averages just to help speed up the analysis on the trends of short, intermediate, and longer term. So let's analyze this. So this is the breakout that we traded, but I'd like to go back in time a little bit. So this is in a wide trading range, here to here, with pretty much flat overlapping moving averages. So it's in a trading range. Then it broke out. Now it got far from the 20-period moving average, so it's consolidating again. And remember, we're pattern traders, so we need a pattern to enter, and then we're overlaying these other concepts. This is where it started getting interesting. This is an ugly red wide range candlestick closing breakdown below the 20 and the 50-period moving average. That suggested lower prices. What happened instead was it gapped up the next day, and we had greater than 100% retracement. Do you remember I said on the prior slide, we never buy from the bottom to the top of the range. We need a setup and bullish price action. So in this case, it did pull back. This wide range bar with an inside bar is what we call a bullish 1, 2, 3 continuation pattern. And all of this sideways action is what we call bullish price action at resistance after this breakdown failure and 100% retracement. And then this is actually a small little buy setup. This green bar closed right dead at the high with a higher low, higher high bar at resistance. We gave this to our subscribers, buy the ETF over the high of this bar, stop under this bottoming tail, manage in between. This is actually a closed trade, which is why it's in this format that our subscribers can see in the open and close spreadsheet in the members area. Every format that we give is the date, the symbol, the stock or option trade, the technical setup. This was a breakout of all time frames, so the weekly and monthly were also breakouts, even though I'm not showing them. And that's why I know when I look to the left, I had a beautiful price void to allow this to move up. So we held this just simply 4 days, bought the breakout, went into trail mode. And the reason I had these arrows here is, and you didn't have to sell half. We teach trailing pivot methodology for trade management. But when things accelerate like this, far from the 20-period moving average, they suggest a consolidation or retracement. In this case, we decided just to take our money. We had a beautiful 13.7% return in 4 days, $414 on the calculated position size on our spreadsheet, and then we're waiting for a new setup. I think just these other arrows also just give you a visual example. It has nothing to do with trend, tradable patterns. It's just saying, hey, this got short-term extended from my short-term 20-period moving average. And notice in every one of these cases, it retraced. And that's why we decided to take our money. Although another method, as I was suggesting, is you just sell half under prior bar's low. You let it retrace and form another pivot, which these dotted lines are pivots. Pivot lows are very simply 3 higher low bars to the left and to the right, and a pivot high is 3 lower high bars to the left and the right. You let it pivot, and then that becomes your new stop, and as long as you have the price void, you can just keep trailing it that way. Come check us out. Take a no-brainer trial to our advisory swing and options letter, which is where this trade was recommended to subscribers. Had a great little 4-day swing trade. Go to mastertrader.com/advisory swing, where we trade stocks, options, all time frames, detailed market review over the weekend, and you will love it. Any questions, as always, email my partner Greg Capper or me. Good trading, and look forward to seeing you in the next trade review video.